Recording available? Yes, I will put it in recording. Okay. Let's quickly go through the slides one more time because since I started recording. So we have seen this price action of the Jacob's quote, right? And myself, 10 years experience in the trading, right? Ultimate goal is to build a community and educate people. And this is a SEBI registered, SEBI's statement why retail people are losing money. And today's agenda is we're going to discuss about the candlesticks, volumes, importance of volume, power of order flow, and all those things. We looked at it, and these are the candlestick patterns, traps that we see. Without any volume confirmations, we couldn't do anything further, and could be easily manipulated during low volatility, right? And of course, the limitations of price actions. We talked about it, right? Market is a fuel, volume is a fuel in the market, right? Volume is the cost, price is the effect. Insufficient volume drives the price moves. Lack of volume is equivalent to the unreliable breakouts. Of course, price moves volume too, and that becomes a continuation that gets looped into the fast markets, right? And we've seen this example, right? In the introduction of order flow, that we can look at the real-time buyers and sellers trend. That's advantage, and we're going to look at these specific tools, right? Which we normally see in our live trading group. So we can see that information behind the candles, and we can look at the absorption, exhaustion, aggressive intent, okay? And all those things we can see it. And the next thing is how we can use it to scalping and take an advantage on an intraday basis. Now, market context matters. Okay, we're going to look at this. What is the trend? What is the range? And what is the value area? Right. We often discuss about this in the trading room. If you guys are attending, the live, you can see my commentary, right, when the market is live. And we are going to look at this one we never talked about in the trading room. Okay, we're going to look at the CPR combination. We're going to look at the pivot point combinations. We're going to look at the VWAP, and more importantly, we're going to look at the market profit structures. Okay, so never trade, any patterns in a vacuum, right? With a lack of understanding, don't trade. Okay? So everything should have a kind of a framework. Okay, if you guys do, let's say for example, that I work in a company wherein my role is to design things, right? And so what is important is there is always has to be a kind of a framework for any work you do, right? So this is the same. This same is applicable for the trade setup as well, right? We got to look at the context first. So define the context, right? And then step 2 is to conform with the order flow, right? And then step 3 is to execute with discipline, right? And step 4 is risk management, right? So discipline is very important, and risk management is extremely important. Okay? If you guys don't follow this framework, one would definitely fail. They will definitely fail, right? So trading is not just only about understanding where to buy and where to sell. It is equally important to know that where to keep your stop loss and how to trade with discipline, right? So that's one key thing. And let's look at some of the practical examples. So now let's go back and let me stop the sharing of the screen, and I will share some of the you guys can see my screen. It's loading up. Okay, so this is the simple candlestick chart that we see every day, right? And we wouldn't even know that how to trade this. Let's say for example, if you take a 30-minute candle, right? It is very difficult, right? You got to understand that. You got to see why this price is bouncing from here, right? So if you look at this plain chart, right, we will not be in a position to understand why this is a bounce from here and why there is a sell-off happens, right? And why there is a sell-off happens after a good institutions buying here or anything that happened after this, right? And this is a 30-minute chart, right? So it is important to know that how the market participants behave in the market. The way I look at it is that I look at the daily chart first, okay? And I make a note of these points where the markets were provided a kind of a turning points, right? All these are all important turning points, right, in the market, okay? And you got to learn to make this as a practice. And you can see a huge buying candle, right? We know we can see a huge buying candle, right? But is it really a good buying candle or something else that we don't know, right? We can see a breakout, okay? And can we see that this is a real breakout or something else happening that we don't know, right? So it's very important to have a little bit of knowledge on the technical side, where we should in a position to understand, okay, this is where the sellers were dominating, right? And this is where the buyers were dominating and all those kind of things. So this gives a kind of a skeleton in the framework of how we're going to look at the market holistically, right? So anybody can say, yeah, market has been, pretty bullish, become bearish, right? And then, if you look at support, right? And it is forming a double top here, right? And a double bottom here, right? And so we can look at all those things, right? This is good. Structurally, this is how we should identify the market. That's very key. Okay? So now when we look at that, then we're going to look at the 5-minute chart or even a 3-minute chart. I prefer 5-minute chart, right? So to understand how the market participants, are active in every candle by looking at the order. Okay? Have you guys understood so far? Anything that you guys share your comments? Is it okay so far? So that I can, take some quick feedback and say type yes or no. Okay. Right. Okay. So just don't give a direct message, put it on the everyone so that everybody will understand, because it's very difficult for me to look at everything from the chart. Okay. All right. So let's look at the order flow chart. Okay. So now, very important. Let's look at what has happened on Friday. If you guys have any specific days, put the date on the chat. I will open that particular chart and I'll explain. So this is the situation on the last Friday, right? Market gap down a little bit, like not a little bit, it's a huge gap down, right? And market rally, right? If you look at things in context, right? Market was in a downtrend, right? Market was in a downtrend. Market, there's a good buying candle, right? And we do not know whether there are sellers sitting here, right? It's very difficult to tell from the candlestick. Okay? But if you look at the order flow chart, we can expect that, okay, there were sellers present yesterday, right? And the market was trying to go higher, right? And it went to the sellers. They were selling here at this level, and then market reversed from, right? So if you look at this, I have, provided a video on this where it talks about the weakness coming, right? This is a market weakness symbol, right? And what do we expect? We expect market to take a little support here, right? Because this is where the aggressive buyers stepped in, and the market was, doing a gap down. And you can look at this volume, right? This volume is huge compared to the previous days, And if you look at this volume, there is going to be a tug of war between the buyers and sellers, right? And another key important thing that we look at is that in the market profile structure, right? So market profile structure gives you some reference point. I don't use market profile extensively, but I do take a lot of reference point to the market profile where I would understand, okay, here is the point of control, right? Point of control, point of control, and there was a point of control here, right? And so it tells me that there is no confluence between buyers and sellers in terms of which direction they're going to take the market for the next few days, right? So in that situation, right, I would adjust my positions accordingly, right? So that is the key, right? So this market structure will give you a better view, right? And you can look at the same thing on 30-minute chart in the candlestick, right? But this doesn't give you the value area high, value area low, and all those informations. So that's a reference point. I always look at it, right, to understand how what do I expect, right, on a given day, right? So technically, when the market is in a sideways range, we always call it as a balanced mode, right? Or somebody calls it as a D profile, right? There are many profiles: D profile, P profile, B profile, and thin prints, okay? Or thin profile they call it, right? So what this means is that, right, market is indecisive, right? And one clue we got is there was a huge sell off, only 24,500 levels. We're pretty close to that, right? So we know that the sellers are sitting here and they are comfortable selling at these levels, right? And it is important for us to understand this structure so that we can keep this as a reference. Okay? When we keep that as a reference point, it is easy to understand from the order flow point of view to know that, okay, where I can see any kind of a behavior in the order, right? Which is extremely important. So if you look at this one here, right, we had a good POC here, right? This is a P profile, right? Good POC, and there was a buying interest showed up at this level. So definitely, what we can anticipate is that from this level, right, we can expect some bounce, right? Here is a POC. The worst case, it will come all the way up to this POC level on the order flow chart, on the market profile chart. But on the volume profile, on the volume profile chart, the POC at this level, right? This is a POC on the volume profile, right? So this gives a clue, okay, in terms of where the market participants are very, very, right? So if they are very active in a particular spot, when that spot is being tested, we would expect a quick reaction. So if you look at this level, and the market fell below the POC, it just went drastic. Okay? And all these things would happen in the market, right? This is a repeated pattern that happens throughout the market. It has been happening for the last 100 plus years, and this is not going to change in the near future, right? And similar setup in the bank Nifty. So if you guys paid attention to what all I say, right, there's a good drive and good consolidation, right, and then good test, and we will expect this level of movement to come in the near future, right? So this was my anticipation. So we can anticipate a little bit. It's not always that it is going to work the same way that we expect, but we can expect some level of an anticipation, right? We can take trades, right? So now let's go back to the order flow. So when we look at this, right, if you guys have not seen my videos before, just I would recommend go and look at it. So what has happened here at this level is that we can see a huge buying and selling volume, right, at this particular part, right, and then market weakness showed up, and when we see this happening, right, we were anticipating either this has to be taken off or this has to be taken, right? Otherwise, you would end up doing only scalping at the edges, right? So that gives a kind of a clue, okay? in the market. So what has happened on the entire day, market was rotating around this entire range, and it did not give any kind of a break, right? The entire range, right? Now, can you do scalping in this kind of setup? Yes. This is a market weakness, right? We can see that the sellers are pretty active here. The expectation on this level is just right. So this is what exactly has happened. Maybe the points are low, concepts remain the same. So when we see this kind of an activity, right, one can take a trade, keeping the stop loss at this level, and then trip to the low of the day, right? That is how the trading would be positioned. Okay? And while this happens, we can see that there was a weakness coming at the bottom, right? And that means that you get ready for the market to lose, right? 80% times it works. Remaining times you have a stop loss hit, but that's okay, right? Market, you cannot trade without any stop loss hit, right? And a similar thing has happened. Okay, at the same time around 11:30, same point at around 11:30, and you can see that what has happened in particular, right? So this is very, very important, right? And if you look at this, there is a POC here, right? Permanent POC. This is extremely important while you look at the order flow trading. And you can look at one more POCs here. Sometimes what happens is that there is a web-based interface, right? You wouldn't be in a position to see it. You can see it live. Sometimes, post the market is closed, right? Uh, because of scaling factors, it would disappear, right? But what we can see here is that, right? Look at this pattern. Market is having a prominent POC, right? Market was selling down, right? And you can see a prominent POC on the bottom side. Market went up, right? And look at this candlestick pattern. There was a huge buying at this level. And what do we expect? This buyers should support the market. Okay. But what happened was market sold out, right? And closed below, almost equivalent to the previous candle. So that indicates that the sellers are pretty, sometimes, right? They do this to trap some of the buyers here. And that is what exactly happened at this. Okay. This candle is at around 11:30. And candle is around 11:30. See 5-minute chart. Okay, at this candle, right? So if one can draw a line here, right, you can see that okay, these are the edges of the market, right? So in order the aggressive behavior has to come, either one of these levels has to be broken, right? But that did not happen the day Friday. It happened the day before on Thursday, right? So we will look at that as well, right? So this is one way of looking at this, right? And this is one of the key features that we look at what is happening in the okay. Now, what are the trade opportunities we have, right? So the trade opportunities we have received on Friday was on this level when there was an POC pairing, right? At this level, right? And you can see this, and there was an buying happened at this level, right? Which was displayed here, right? Here, right? And then you can see a buying here from this level to this level, right? So these are the kind of opportunities that you get while you use the order flow. What it means is that you would not trade a wrong location, right? If you're short here, this level, right, expecting a good drive down, and the moment you see this, right, you're going to exit your positions, right? Maybe your points, so you may have got only 10 points, right? But still, you would not be in a loss. So that's another key advantage. We use the order flow to look at the data and see how this can be taken into consideration while you take any kind of trades, right? So this is one sort of an example, right? And the other sort of example is we always trade at the VWAP, right? VWAP is obviously everybody knows that it's a volume weighted average price, which gives a clue in terms of where the accumulation or distribution is happening in the market, right? This is one of the major indicators that's been used by the institutions. This is the one lagging indicator that we use in the trading in the order flow, but the remaining things are all all leading indicators, right? So the moment you see this, right, wait for a price move at this VWAP, right, and then take a trade. Or if you're proficient, you can take a trade at this level or at this level. The moment you see this kind of POC and enjoy that, so you get additional 10 points, right? The reason why I say that is this is going to give you a minimum stop. Ultimately, that is what the risk management is all about. How do you manage your risk? So here in this case, your risk is very low, right? The reward is at least 1:1 or 1:2. Okay, so that's one thing that you should consider while you take any kind of risk, right? So this is the Nifty chart, right? Let's look at the previous day Nifty chart. I'll show you some examples in terms of how the order flow has played, right? This is open, right? You can see this entire drive, right? VWAP, okay? And this is one another setup I always pay close attention to. When you have a driver, right? You have a POC, and we expect that to test with the VWAP. In this case, it did not test, right? And when the buyers are trying to push the market high, that POC will act as a resistance, right? So this is one way of looking at the market. This is one way of strategy that I look at it, right? And to understand how the market is being trapping users. This is typically a trap that has been set the other day to take the entire market down. Okay, so this is one of the strategies that we look at it, right? And one other strategies I would explain is, for example, when you see right anything like an continuous buying behavior, continuous selling behavior, right here, right? At the open, you see a good buying behavior, right? This is fine, right? And you had this continuous buying behavior, right? At one point, they will be exhausted. Okay, when they exhaust, right, that is a good turning point to take a counter trade. This is called a mean reversion trade, right? We can expect this. Normally, we don't keep stop loss at the VWAP here. I mean, target as a VWAP here, but we'll keep the target as the stacked imbalance, right? This is a buying stacked imbalance in the particular day, right? And we can expect a reversal from that particular point, from the particular location, right? So Orderflow will clearly tell you, right, where to take a trade. This is extremely, you're actually, if you look at this, you're actually, capturing this point, right? Very, very minimal, right? So, the moment you take a trade, right, your positions will be immediately in profit, right? And you would not take a trade here and wait for it to reverse. Right? You wait for the market to go up, that the market shows some kind of a symbol, and then you reverse your trade. People might wonder, okay, this is a buying market. Yes, I'm not denying that, but the buyers are getting weak, right? And the weakness will drive the market to the stacked imbalance on the buy side. And the similar case on the opposite side also, right? So if you could pay attention to all those things, right, uh, you can literally capture the top and the bottom. Okay? So all these symbols we talked about in the other videos where we have explained, right? Look at this from here to here, okay? Typical behavior. and look at this from here to here, the typical behavior. Okay, and one another example. Let me put it this way. Right. Okay. You see this, right? 24507, you have a prominent POC, right? And you have a prominent POC as 24,534, right? So this is exactly happening pretty close to that, right? So this is another confirmation for you, right? When this kind of POC happens, almost the same level, right? You can consider that point as a good strength or good support or resistance based on where it occurs, right? And then take a trade account, right? So, and this is, extremely important, right? When you guys are taking any kind of a scalping trade, okay? This is another example, right? Let me go to the chat and ask questions. Okay. Are you guys are understanding so far what I've explained? Can I get a yes or no answer? Can you guys hear me? Is it useful or is it boring or what is it? Okay, right. Now, let me look at this is a very, very basics, right? I mean, my intent is to teach you the very, very basic things, what is practical, right? And what is applicable for you guys to take any kind of a trade, right? And I talked about this, max delta and min delta in different videos. You guys can take a look at, right? And little deeper, please. Yeah. So if you look at this, right, um, here, right, you had this kind of a drive, right, and you can see this kind of a zero here, which is a max delta, right? Max delta tells you that there is no aggressive control of the buyers in a particular, right? So this is contradictory, right? What happened? This level is market is closing the higher level, right? Compared to the previous one. Okay. So that kind of give an indication that yes, there is some kind of a passive buyers stepping in this level to take the market. They were successful, but they were not quite successful throughout the day, right? So that is one basic things that you should pay attention to, right? You can look at all these deltas, right, and understand that what is exactly happening uh, in every candle, right? So this is extremely important in reading the data. I would recommend you guys go and look at those videos. I have a playlist defined already, right? And go and take a look at those videos, and you get a clarity in terms of understanding how the flow of the market happens, particularly, right? Um, okay. Trade examples, entry, exit, stop loss, targets. Yes. So this is what I was talked about, right? Ashok? Like few trade examples, entry, exit, stop loss. Okay. So if you look at this, okay, let me show you some examples. Let's go back to previous slides. All right. So if you look at this, Ashok, right, you have market has done a gap. Market has opened inside range, right? And market couldn't go higher. This is a zero print, right? And I will explain the zero print on a different day, because if I expand it in detail, it's going to take a lot of time. So one could take a trade at this location, okay, and keep the stop loss above this level and enjoy this ride till you see some kind of an trap. Okay, so where is the trap here? Right, there is a confirmation came at this level, right? You can see this, and this is the confirmation for the trades you have taken before, where you are in a short to this level, right? And then this gives a confirmation, and when you see this, right, kind of a trade, right? This is step when the market order flow skips, right? It is basically indicating it is trying to hit the stops. Okay, so when you see this kind of an setup, and when you see this followed by this, right, that indicates that sellers are stepped in here, they push the market all the way down, right, and then wait for the closing bar, right? This bar closed the middle, right? Now, following bar confirms that it has taken all these sellers. Okay, so if you are riding this wave from here or above this wave or right at the open, okay, this could be your exit. Okay, so that's how you should look at your exit points, okay, and entry points actually. So always remember, when the market opens in a particular scenario, for example, when the candle opens with a green or buy, sell, most of the times the market will follow that particular trend all day, right? That is very, very key. I look at this, which is critical, right? Sometimes it may be confusing to you. Okay, can I take a trade at this level, right? And the market is rotating like this. That time you got to wait, right? Wait for something to happen, and then you look at this. It is exactly happening. The weaver, and we know the market was selling right from the morning, right? So the sellers were waiting for prices to reach up to the VWAP level and then sell it again, right? Because this is a kind of a classical example of a liquidation fund, right? Market needs more liquidity. Okay, so if you are a scalper, you have got multiple trades, right? For example, if you do try to go open here, right? This is one of the classical example of a trap, right? When you see this kind of a trap, have a position here, take a shot here, keep your stop loss here, right? And every time it comes down, right? Trail your stop loss and keep it moving down. Okay? So you don't not necessarily has to take many trades in a specific given day, right? You can enjoy this trade. So for example, when you take in a trade, this side you have got a dominant POC, right? So move your stop loss, right? And keep riding this particular way. Okay? Or if you're taking like for example 10 lots, right? Book 5 lots here, right? And keep it that way. That will give you a maximum profit, and that will allow you to stay in the market in the right direction. And that's a more key important things that you got to pay attention, right? This is one example, Ashok. Okay, let me show you. What is the copy? Choose 10 days before in Nifty. Next time 10 days before. Just 10 days before. Let me see what is today's date. 11th Thursday. First. Okay. All right. So this is on Friday, right? So market has had a good buying, right? This is a good buying, right? This was a good buying showed up. This is a zero print actually, but still it's considered buying, right? And you could see this rally going up. Okay. Now, if you see this, right, what is happening is that the buyers who stepped in at every level are getting exhausted at some point in time. Right? They move the market from 24,400 all the way up to 24,720. They moved the market already by 300 plus, right? So now, at some point, right, market has to show some kind of weakness because buyers cannot be buying the market at all the time, right? So there has to be some level of a pause will take place, and this is what's shown here. So they're showing that market is getting weakness. Yes. So when this weakness comes, right, let's wait for the market to give you additional signal. Right? In this case, we may or may not take the trade at this level. But if you look at this level, you will see the pink color. Right? This is actually a problem. Okay? And I do not know whether you can see it. Okay, can you see this color? Type yes or no. Right? See this color. Right? Ask yourself the question: market open good thing, good open, weakness coming in. Right? Pay attention to this. Right? 260 contract. That's a stop loss. Right? And then you can see the buyers, sellers stepping in pretty. Market short weakness. Buyers stepping in pretty. Sellers stepping in pretty. Market short weakness. Right? And look at this. What happened to this contract? 145, 160. What happened to this contract? 580. Right? And then buyers stopped buying a little bit, right? And they pushed it hard. Right? At this level, you can see the huge contract of 1,000. Right? Yeah. So you have 1,000 contracts, right? And market closed. This bar closed. What does it tell you? That tells that these guys were bad, right? And they pushed it hard. Same level, nothing sold. And this is exactly the top. 24/7, exactly the top. Okay? What day is this? Is May 2nd. May 2nd. I'll show you some kind of correlation on the. So at 24/7/20, right, it gave a sell. Right? It gave a sell. There's a stop loss. No, just keep 20 points above and enjoy this. You would have captured huge. Okay? And additional confirmation came in this doing this slide. Okay? You see this buying stacked imbalance, right? This has been taken, right? This was given a little bit bounce. It is exactly happening at the. Okay? So what does it mean? It means that these buyers are getting challenged. Right? All these buyers are getting challenged. All these buyers were trapped. Okay? Now the sellers are turning into little. Okay? And what happened? Sellers showed up here, right? And what happened after that? Market came in with that. And at this point, you see this, right? This is at 690. There's one more POC came, okay? Prominent. So if you look at this bar, okay? Look at the amount of sellers. Let me enlarge this. Look at this bar, right? There is a good selling, right? And if you relate to this, okay, you had buyers, 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 yes, right? And you have more buyers here. Look at this way. When you have more buyers, right? When market is closing middle, what does it tell you? Buyers are getting trapped. And this is what shown. And then wait for a couple of bars. You can see this data. It confirms that sellers are getting absorbed, aggressive here. They absorb all the supplies or the contracts that is coming in buying side, and then they push the market. Okay, so this is an point where you can exactly catch. That's what we call as a kind of a precision trade. Right? Precisely, we can look at what is exactly happening in the market. Okay? So this is the key information that you can always pay attention. Right? But little careful on the VWAP side because the market showed right, bit of an aggressiveness morning opening candle when they are being tested, right? And especially at the VWAP level, they have to see what is happening. Right? They were trying to negotiate here, right? They were trying to negotiate here, something, right? What happened? Sellers came in. So if you are new, because if I see this, I will take a trade. Okay? That's how I keep my stop loss very minimum, and I will enjoy all the day. Okay? Now, if you are new to Orderflow, then this is a good place for it. That is a stop loss for the week. Because you have this confirmation, you have this POC, you have this POC here, all this bias has been taken out, right? Negotiation is happening in the VWAP level, then you have a seller's comment. Okay? And then, okay. So always look things in context. Okay? If this is on May 2nd, look at the market. This is on May 2nd, okay? May 2nd. Here's the May 2nd, right? So what has happened? Okay? Market, yes, this is a balance, right? This is a balance, this is a balance, right? So can we say this is an accumulation? Oops, yes. Because market has moved up, accumulating, right? Indecisive, and you had this particular bar on base. So that tells you that we can expect the market to rotate this level. Okay. What is our level here? This is POC, right? And if you scroll back to the previous charts, you would know there will be some, maybe in a few weeks, but we don't pay attention to this because we look at this. And you can also look at this at the POC form. This. So this is, very important, right? Look at this. So you can see, right, on this particular day, market was trending up and consolidation happening. You have a huge volume here, okay? And that volume has been tested. Okay? So this is the way that you should look at the market structure when you take trades. And we look at the market structure just once. That's it. Once you know that, okay, we can expect some kind of an, push from this level, you can confirm that with the order. So that is how you should probably take trades that the and on the same day. Look at this. Huge selling, right? And buyers just stepped in at this point, right? One classical example. Look at this. Huge seller, right? All these contracts have just closed above the particular. This is the magenta color, which indicates that the sellers were dominating this particular bar, but not close above the middle. And you could see this option is getting closed at this level, and you see zero, so option, right? And you can see the prominent POC in the buy side. Okay? So this prominent POC will give you a clear picture that yes, buyers are stepping in this level. Okay? Exactly pretty close to it, right? So this is how you should position yourself comes to trading, okay? And that kind of helps you in terms of where to keep a stop loss and all those things. Okay? Similar behavior, right? Sellers were tired, buyers showed their hands, all this at all these levels. And look at this. The maximum control is in this, right? 48%. The entire volume is controlled by the buyers. And where does it close? It closed at the middle. That tells you clearly that these guys are getting exhausted. Another important point, right? We talked about POC migrations quite often in the trading, right? This is the POC migration, right? POC is getting migrated. And post which, you see there is a POC sideways, right? And that leads to the downfall. So if you pay attention to all these kind of little small things, right? The trading would be more easier for you. You would not be under pressure. You would not be under stress. Okay? I hope that example was little clear, right? Yes, you have to learn a lot, Ashok. But what I'm telling you is uh, very very minimal, because more time is spent on the market, right? You would know, because my eyes are trained to spot these things, right? The moment I see this, I know this is going to go, right? And that is the way I look at it, because my eyes are more trained to this levels, right? Is there any significance if a POC is inside a bar closing or outside the bar closing on a wick? Yes. POC is a part of, right? So when you see this, right, this is good. Okay, see this. You have to see it in relation to the particular chart, particular candle. So POC is migrating down, right? Here. Here there's a POC, at the same level, right? And the POC is migrating. If this happens in the middle of the bar, it's good, right? Sometimes if the buyers stepped in very aggressively, right? They stepped in even at the open, right? When that happens, right? Normally when the POC happens at this level, that is considered strong buy, okay? Strong buy, right? This is getting weak, okay? Right? These are all late buyers, okay? Late buyers, okay? This is a little bit of early buyers. These are all late buyers, right? And the position of the POC happens at the bottom, and the buying side would carry more weightage compared to the any of the POC happening in the particular. Okay. Similarly, if you look at it, POC bring at the low and bring at the low, and then shifting to the top level carries some kind of significance in the sense. They show that it shows their intent, right? It shows their intent from the start of the bar to say that yes, I'm going to dominate this. I'm going to cover the huge and things, right? But POC migrations, pay attention to, but my attention should be more towards the what is happening in the delta levels, right? And who's controlling the particular part and things like that. Okay? That is more weightage for me. POC formation on the bar will be additional information. Okay? I hope that answers your questions. POC will be found at the end of the candle, the start of the. It depends. Right? It shows up at the bar formation, right? But I would wait for the bar closure to take it, because when the order is flowing, particular candle, I want the candle to be closed. While at the open itself, the candle may give you some level of an indication, but it is best advised to wait for the candle to be closed. Okay? That's the way that you should look. See, I do not know how many of you got more experience in order flow. In case of starting in the order flow, you would say that start slow, right? Understand these little small things, right? This is more than enough for you guys to take. So I am, having this webinar in the application stack, right? How one would be in a position to take a trade, at what's the trade location they should look at it, right? And where they should keep their stop. That is extremely important, right? Now. So this is about the order flow, right? And we talked about red triangle. Those are all the inverse imbalance. All these are all inverse imbalance. Right? Inverse imbalance is opposite to the stack, opposite to the imbalance. Right? What is an imbalance? Right? Stacked imbalance, for example, or buying imbalance. Buyers are more, right? Inverse imbalance is exactly opposite. So anything that happens at the top tells you that this is a less inverse imbalance. Right? And I don't pay much attention to that, and you should always relate it to the prominent people. This is an additional confirmation. This is what you're, right? So that is an additional confirmation, right? Okay, so that is an additional confirmation, right? And you wouldn't see that happening on any of those. So this is good enough for you to, right? I have this prominent POC coming up, this weakness coming up. These are all confirmation that you're getting, right? And good volume of buying or close. That's all. That's all you need. This is the location you're looking at. This is exactly the location you're looking at, right? So this is how you should be patient, right? And wait for the market to tell you what it is planning to do. And all these indications are coming in, right? When this is happening, people say, yeah, I have a breakout. I'm going to buy it. Boom. They got trapped. Anybody taking any questions here? A lot of people have taken questions, right? At the contracts. 1,100 contracts, right? They're getting trapped. And they'll be in what? Right? They look for a VWAP, right? Yes, give a bounce, but again, so right. So all these little nuances will give you a better trade. Okay? Any other questions, guys? Before I show you something related to the, I know this call is going a little few minutes extra. That's okay. Any questions on the order flow? You guys have understood so far? At least, are you having some kind of a glimpse in terms of how you should look at the order flow? Can I get some answers? Yes or no? Okay. All right. So I talked about the this one, right? Talked about this. Okay. Okay. Right. Now we have seen this trend versus range versus value area, right? We looked at the value area, high, value area, low, ranges we have seen in the charts, right? Trends we see through the price action, right? And now the question is, how do we talked about the VWAP, talked about the market structures, and let's see how we can combine this CPR. Okay. So, how many people use CPR? They're trading. Another valuable information that you can get. How many people trade CPR? They're using, okay, right? Okay, fine. Let's look at some of the CPR examples, right? If you guys want a specific video on CPR, let me give one. So, we own CPR, right? This is the CPR I use. This is my own code. Okay. But now Let's look at this example. We talked about May 2nd. Right? If you guys are not aware of this pivot point CPR, you guys are not using it, let me know. Please let me get some understanding. Can you guys give me some answers? CPR, yes or no? Okay, post everybody. CPR. Okay, so if you guys are not using CPR, I would recommend you guys start using CPR. Okay. There's a book from the Frank Ochoa, Secret of Good Boss, and I have coded based on this. This is my own code. If you guys want this code, I will publish it. Right. So if you look at this example, I use pivot bus, pivot points, and then I use CPR. And I also use camera. So I'll explain that in one webinar, different day, just purely based on CPR. And this is price action I deeply respect. Really works very well. I don't use anything else except this. Now, let's look at this. Right? Look at this and this is our maze. I always use both spot and the features. So you have seen this, right? This is a CPR. Right? All this color CPR color. All this white is a camelula pivots, right? And the remaining all standard, right? As per the CPR, as per the Frank Ochoa's pivot. Okay? If you guys want any training on CPR, say yes. Guys, me, yeah, okay. Look at Frank Ochoa's. Don't look at all the Indian guys who make training videos. CPR. Okay? Don't look at the Frank. And some of the guys here are not telling the true facts, right? Okay. So if you look at this May 2nd, right? This is an buying candle, right? This buying candle came, and all these things got tied up the support level of 2. It reversed on that. Okay. So we can, by combining this, can anticipate. Okay, so this gave a breakout. How do I know? You can look at this. If you guys highly recommend use CPR in your trading chart. It is available in every trading platforms, and that give you a great big picture in terms of looking at the. Look at this. This is a 24/7. That 24/7. That's a difference. How many people would know why it stopped at support this level? Not very big. Many people would. So this is the so this is the resistance. Right? See this, right? This is the resistance. And check it. Resistance, right? So it went all the way to R4. Right? This is supported resistance. Right? And it goes all the way up to R4 level. One can expect. Right? But there are times that people would think that yes, just hit then S3 level, right? It has hit the S1 level, or people call it as a S1 reversal, S2 reversal. No, don't look at that. look at the order. You look at this order. Once you look at the order flow, it will very clearly tell you that this is exactly each key area. So when you look at this will give you a track. Okay? So what is the expectations? Market moved up. Okay? And the day before, it's in consolidation. Okay? It's been consolidating for quite a while, right? So we can expect some range break. Okay? And we see this range breakout, these are all emotional. Okay? We see this range breakout, these are emotional. Okay? Because people are getting frustrated and institutions take advantage of it and they want to push it, give a fake breakout, and then push the market, right? Now, if you look at, you guys not understanding this, I will explain another day, right? There is always a pivot relationship, right? If you look at this pivot relationship, this is something like a point of, see it as a point. That's how you should see the CPR. CPR is nothing but your point of control is here, point of control is here, your point of control is here, right? What does it? It tells you that this is a fake breakup. Okay? This is exactly fake, right? And next day, right, your point of control, because there's a lot of volume happened at this point of control, right? And then you had a little bit of, right? This is nothing but the camera, right? It's the H4 level. When you see this H4 levels, you would expect the kind of a retrace back to the LP. Let me show you. It's a bit confusing to you guys, but I explain this very, very short. Okay. This. Okay. So this is only about the camera pivots. Okay. So you see this. Anything that opens below, this is called anything that breaks down. L3 will definitely hit. Okay. This has been a proven theory. Camera pivots. You can look at this. Any charts, what this happens throughout the day, right? If you have not seen this before, it's very good way of looking at the market, even if you don't use it. Okay. For example, this is considered a, okay. You have the previous day high, right? Breaking out. This is an H3, right? Anything, this is a breakout, right? According to the Frank Ochava's Pivot Boss book, this is a breakout level, right? This breakout level will definitely hit. And that's what exactly. So this is kind of a breakout strategy. Always, but my reference point is more towards the don't trade. These are all some reference. Now we show this weekly structure. Okay. This is my own code. So if I go to 30 minutes, give you the weekly structure. Look at this. It's struggling at this with the H3 level. Sorry, L3 level. Sorry, H3 level. Sorry. So when you have this kind of thing, right? The expectation is that it will come and hit the L3, right? So this is an proven methodology, right? If you guys are not using it, I would strongly recommend use it. Okay? That give you bit anything that opens above The H3 level would give a break. See this breakout? Right? This is a good breakout, right? And L3 will H3 will always act as a support. So these are all breakouts that I always look at for reference. And so at the start of the week, I would know, okay, this week it has given a good opening trend and not taken this level. We expect this to be moved. And this would give you a good indication in terms of, right, worst case it will come all the way up to the L3 level. Okay? So this white markings, pay attention to this white markings. Right? So that kind of gives you some level of, okay? And similarly, if you look at the monthly also will give you, sometimes when I'm away from the market, right, I look at those levels and comfortably sell the options both sides and look at this one. Okay? Previous month, okay, it has not taken this. Now we have come to this level. Worst case, it may come to this level and bounce. Right? So because when you have these pivot points and the camera pivots same level, this will act as a good. Okay? And if you guys really want to take a separate class on this pivot, let me know, and I can surely um, give you some kind of a presentation on it, right? Okay, so with that, I would show some of my own indicators, right? To give you some kind of a reference point. These are the indicators that has been developed. Okay, so if you look at this monthly chart, right? Monthly it gives a good indication in terms of selling, right? And if you want to guys, if you guys are a seller, a positional trader, take a PE and sit comfortably. Okay, and similarly here, right? Good buying, good selling, good buying. So these are all long-term time frames, monthly time, 2 hours, right? So these will be very useful, right? With regard to the in comparing with the order. Right? Look at this here, resistance, sell off came in. Boom. Okay. This is very useful for you guys if you want to be in the trading where you want to be a positional trader, right? And you would not have any headache. Look at this, exactly catches the bottom and move high, right? You have captured on the way up to 22,800, almost 700-800 points. Just one trade, right? You shouldn't be worried about too much, right? So this works on 5 minute, 3 minute. I sometimes look at the 3 minute for reference, right? On the other day, it gave a good sell this level, and this was the last Fridays, right? All this act as a resistance, right? Came back, it's just rotating, right? So it's important. That's the reason that I always mix up the price action along with the order flow. Order flow is a key. I look at this, right? And I look at the price action to see where the levels are at. And if it has been respected, I'll be more comfortable taking all the things. Okay. So I think we have exceeded more time. And if you guys have any questions, let's 6 minutes. If you have any questions, let me know. I'll be happy to answer. I'll start throwing the CPR charts today. Next week I'll not be available. Charts will be on the live. Any questions, guys? Right. So let me go back. discuss about this. So summary is candlestick and price action not enough, right? Body adds clarity, that we have seen it. Order flow is ultimate, right? So context prevents overtrade. So the moment we know that market is in a sideways range, right? We should know how to keep our orders to the lower level, and we should know that how we should take only scalp trades. Okay? That's the context we are looking at, right? Any questions, answers, let me know. Else, we will wind up this meeting, and I will put this recording in the YouTube, right? And if you guys have anything that you guys, one thing I would ask you guys is that please, share and like. Guys, like this presentation. This is my first presentations. Maybe you do big much better than this one next meeting. If you have any questions, not we would mind. Beginner, how to avoid noise in order flow. You have to be like the examples have shown, right? For those examples, if you go and refer back, right? Don't look at anything for the noise, right? Look at only those particular signals that is shown up on the flow. Ignore the remaining ones, right? Because if you look at that, immediately you'll get confused. Is it buying or selling, absorption or supply? What is exactly happening, right?